How the stock market makes millionaires. For many people in the United States and the United Kingdom, the stock market has been one of the most powerful tools for building wealth. Over the last century, countless ordinary investors have turned small investments into life-changing fortunes. But how exactly does the stock market create millionaires? To understand this, we need to look at a few simple but powerful ideas. First, what is the stock market? The stock market is a place where people buy and sell shares of companies. When you buy a stock, you are buying a small piece of that company. If the company grows and becomes more valuable, your shares increase in value too. For example, companies listed on the S&P 500 represent some of the biggest and most successful businesses in the United States. Over the long term, this index has historically returned about 10% per year on average. Now, imagine investing consistently over many years. This brings us to the first secret of stock market millionaires: compound growth. Compound growth means your money earns returns, and then those returns start earning returns as well. Over time, this creates exponential growth. For example, if someone invests $500 per month into a stock market index fund and earns around 10% per year, in about 30 years, that investment can grow to over $1 million. This is why time in the market is more important than timing the market. Even famous investors follow this rule. One of the richest investors in history, Warren Buffett, built most of his wealth by investing for decades rather than trying to make quick profits. He once said that the stock market is a tool for transferring money from the impatient to the patient. The second secret is owning great companies. Many millionaires became wealthy simply by investing in successful businesses early on. Companies like Apple, Amazon, and Microsoft created enormous wealth for long-term investors. Someone who invested just a few $1,000s in these companies decades ago could be sitting on millions today. But you don't have to pick individual stocks to succeed. Many modern investors simply buy index funds that track the overall market. Funds that track indexes like the S&P 500 allow investors to own hundreds of companies at once. This spreads risk and makes investing much easier. The third secret is consistency. Stock market millionaires rarely invest only once. Instead, they invest regularly, every month or every year. This strategy is called dollar cost averaging. It means you continue investing whether the market is going up or down. Over time, this reduces risk and helps investors benefit from long-term market growth. The fourth secret is patience. The stock market can be volatile in the short term. Prices rise and fall every day. Many beginners panic when markets drop, but history shows that markets tend to recover and grow over long periods. Investors who stay calm during downturns often benefit the most when markets eventually rise again. Finally, successful investors avoid common mistakes. They avoid emotional trading, chasing hype, and trying to get rich overnight. Instead, they focus on long-term investing, diversification, and disciplined saving. That is why millions of everyday investors in the United States and the United Kingdom use retirement accounts, investment funds, and stock portfolios to build wealth slowly over time. The truth is, most stock market millionaires are not lucky gamblers. They are simply patient investors who let time, growth, and compounding do the work. And that is the real power of the stock market. Because when used wisely, it is not just a place to trade stocks. It is one of the greatest wealth-building machines ever created. Don't forget to like this video and subscribe my channel.